that has been what the talk is, behind the scenes talk about why the banks no longer accept each other's collateral. Because the Fed will. The Fed just, all they want to do is keep the system going. They're in charge of the jukebox. And in musical chairs, you don't want to be the one, unless you're in charge of the jukebox, you don't want to be the one holding the assets that are pledged to 2 or 3 different companies.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. It's been over a year since we've had this well-known guest on. Weir is the founder of the website roadtoruta.com. He's also been in the financial industry for over 30 years. He's joining us again here in Reluctant Preppers. Bix, welcome back.
Hey, Don, again, thanks for having me on. It's been a really long time.
You mentioned before we went on the air that this is our first time to be face-to-face, because I wasn't doing interviews that way. I was doing audio only back the last time. That's how long it's been. So anyway, welcome.
Thank you.
Hey, we've got a lot going on in the economy, the global economy, the U.S. economy, or should I say we've got a lot less going on. That's one of the problems. But also that's causing some real reactions on the part of both the stock market volatility, precious metals over the last several months. So, and then now some extraordinary actions by the Fed, which they're calling, bond repo actions, and with some very spurious justifications, like, oh, there was one night that all the banks needed money so people could pay their end of quarter taxes. It's like, yeah. So anyway, could you start off by talking to us about, let's talk about real things right off the bat. What do you think is really going on in the U.S. economy and the global economy? So let's talk about boots on the ground, real economy first, and then we'll get into all these various ways that we measure or participate in that.
Well, sure. Well, knowing that the Fed massages numbers, and that's putting it lightly, massages numbers about the economy, and knowing that they can rig every market out there with the exchange stabilization fund, with the computers, they can jack up the price of the Dow, no problem. I mean, it's a click of a mouse for Steve Mnuchin. Those who don't know, Steve Mnuchin was the head of IT at Goldman Sachs before he came over to the Treasury. So he knows a little about computer market manipulation, and working with the Exchange Stabilization Fund that was created back in, I think it was in 33. And their job was to keep control over all markets, not just the gold dollar backing back then, but it gave them actually the right to rig any market they want. And we've seen it, my days with GATA, they've been rigging every market. So they rigged the stock market, the bond market, but in actuality, behind the scenes, things are really bad off. We're seeing a retail apocalypse is what they're calling it. Housing prices are massive bubble right now, and they're starting to fall. It's kind of like everything is in a bubble and unsustainable. I've always said that the Fed was trying to do this. This was the end game for the fiat money system, is blow up the bubbles as big as possible so that when they do crash, it takes everything down with it. So I think that's where we are now.
So if that's what's going on in the economy, what do you think is happening with these bond repo actions that are fairly extraordinary? That, I mean, they always seem to come up with different terminology. Every single QE program that the Fed has done, they seem like I can't even, I remember all the names, QE1, QE2, twist, and operation this and that and whatever. But is this just another form of QE that's going on? What do you think the target recipients are of these bailouts, and how long? They say they've been going on for about 2 weeks now, and it's still going to be going on for some further. But what do you think is actually happening with those?
Well, I had pegged September 11th as the day that the financial plumbing will get backed up, just from the work I've done on the road to Ruta. On September 11th, 2008 was the day that there was an electronic run on the banks. And I think it was the Fed trying to implode the monetary system. And from a lot of my work, I'm like, well, it's looking like this. I said about 6 months ago, this September 11th, we're going to see the same thing. And I think it did happen, because it wasn't until I think the 16th, all of a sudden you had the 10% overnight repo rates, which is just the banks trading between each other on overnight money. It's supposed to be the cheapest money. And that's when the Fed had to come in and start bailing out, and the bailouts got larger and larger. They had to extend it to a 14-day repo, which is basically a 2-week loan for, I think it's right now at $139 billion to the banks, because the banks, the liquidity in the banking system is running out. And the biggest problem is nobody trusts each other, and nobody trusts the collateral, being treasury bonds. Not we all know that the US dollar is weak and they're printing as much as they want. But the problem is at the broker dealer level, where they've re-hypothecated the US Treasury bonds. So Citibank and JP Morgan and Bank of America all own the same bond and use it as collateral to get repos, because they stopped accepting it from each other. It's absolutely out of control. So we've got about a week left until the 14-day repos are exhausted, and then they're going to have to either figure out a new bailout, like you said, a ZERP or a QE or something, or we're going to see a collapse in the system, much like 2008. And then they'd have to come to Congress and say, okay, in 2008 they came and said we need $700 billion. It was Hank Paulson said that, and Congress said no. The stock market dropped 50% right away. This time I think they're going to ask for 20 trillion, which is a mind-blowing number, because it's no longer the mortgage-backed securities and credit default swaps. Now it's the bond market. The bond market is re-hypothecated. The bond market is broken, and it's one of the largest markets in the world. So they're going to need a whole lot more money. Then it comes up to we the people to bail them out or not bail them out this time.
That you've just touched on a question. I didn't mean to get to viewers' questions this soon, but I can't resist. Shelley said, how do the banks get the repo money handed to them without going to Congress for approval, like they had to do with TARP money in the last crisis? What's the difference?
Well, the Fed has flexibility in the repo market, which is the overnight market. You could say they're above the law, any law there might be. The Fed can always say, oh, it's a crisis. And obviously with the repos, it was a crisis at, when the rates jumped from like 2% to 10% overnight. But that has a limited lifespan. And you got to remember also in the background, the Fed didn't even have to say anything about this. They could have hidden this all on the rug long ago. They really don't have to report any of this. But I have stated all along, since I discovered the Fed documents at the Fed Boston, that the Fed is looking to destroy the system. They know it's not sustainable, and they know they want to get out of the unbacked fiat system, because the amount of lies, cheating, and stealing that has gone on, and wars that have been created by unbacked fiat money you can't even calculate how many people will die now if the system stops, and all of a sudden the banks crash, versus how many people have died with the banks in business, World War I, World War II, the Korean War. All that could go back to, if you do enough research, it goes back to the banking system, the unbacked fiat monetary system, trying to keep it in place. And, obviously the banks make a lot of money when wars break out. So yes, people will die if all the banks collapse in a derivative collapse. That is a given. But how many people have died over the last 110 years since the Fed's been in office? So it is a give and take there.
I know that doesn't exactly give us a warm, confident feeling when you point out that the Fed is really, in some sense, operating outside of the Constitution, outside of oversight by the people or the government. And so really the fact that they were benevolent enough to let us know that they were doing this is like, well, that doesn't make me feel any better, thinking, what do I not know about? But anyway, yeah. Could you talk to us a little bit about hard money, gold and silver? They've certainly showed signs of life over the past 6 months after having been pretty much in a trading trough for 6 years prior to that. What do you think are the driving factors that are causing this apparent breakout from gold and silver's long still period?
Well, I'd say the biggest factor is that those who control the price of gold ultimately would be the Exchange Stabilization Fund, the US Treasury, and the Federal Reserve System, with their prime dealers. They no longer want gold and silver to be manipulated. Now, what does that mean? It means for silver, it's 150 years of price suppression will be cut loose. I don't think we'll see it on the COMEX and the LBMA. Those are the only two exchanges that trade silver in the world, which is kind of crazy, and they're both derivative exchanges. So there is no real silver exchange that says, okay, here's 10 tons of silver and you got cash, so here's the price. That doesn't happen. I do think they are letting it go slowly but surely because they want the old system to crash. They know there's a lot of criminals. You see the RICO charges with against JP Morgan traders. That goes right to the top of JP Morgan, Jamie Dimon and Blythe Masters, and even the board of JP Morgan. They are setting them up for RICO charges against the largest bank in the world with the largest stash of silver in the world and the largest player by far in silver out of any bank or any government. So yeah, it's a real big deal, and they were not kind. If you read those charges against those traders, they didn't even name J.P. Morgan. They said Bank A. There's Bank A and Bank B. They called them Bank A. There will be charges coming down against the leaders of J.P. Morgan, and J.P. Morgan, the company itself, will probably be dissolved and unwound if they don't kill themselves in the derivative market, because they're knee deep in derivatives beyond what anybody could even imagine. They added another $11 trillion in the first quarter to their derivative book to blow away Deutsche Bank. So there's a lot of broken things in the background right now.
Well, could you talk to us now about what's going on in the crypto space? It certainly seems like it's been somewhat performing as the anti-dollar, as President Trump and others seem to be, bent on destroying the value of the dollar. Crypto, maybe characterized by Bitcoin, had shown a lot of strength and then some pullback and then some strength again. What do you think is the reality of the nature of what's going on with cryptos and why it's behaving the way it is?
Well, it, like all other markets, gold and silver market, bond market, stock market, is rigged. So it's easier to rig the crypto market. It's new, it's smaller dollar amounts. The exchanges are completely false. They don't hold the cryptos that they say they have. Just like the stock market, the bond market, they're all re-hypothecated. But in cryptos, it's kind of hyper extended, shall we say. For example, Litecoin, which is one of my favorite coins because you could use it to buy a cup of coffee type of coin. Every 1.5 days, all the Litecoin that have ever been mined are traded on the exchanges, which everybody knows is false. There's not that much Litecoin out there to be traded. So you see the same kind of fraud that goes on in the silver market, where they trade 300 times the amount of silver that's pulled out of the ground with the cryptocurrencies. But it's easier to rig the cryptocurrency markets. The people who will win are the people who take their coins off the exchanges, out of the online wallets like Coinbase and Kraken and Gemini, and then put it in their own possession. Because at the end of the day, the crypto markets are not long for this world in their current form. Just like the silver market, silver prices won't go up until the exchange shuts down. And I think we are approaching that, especially with the RICO charges of JP Morgan. So yeah, it's kind of the same boat as silver. It's, silver obviously has 150 years of rigging, whereas cryptos just have probably about 6 or 7 years of real massive rigging by the same players, JP Morgan, the Fed, the Treasury. They know what the cryptos can do for humanity. And that is to free us from the banking cabal to a point. Now they're in it too. The banks are in it. There's all kinds of control and manipulation around certain cryptos, certain mining pools and things like that. So I don't know if we can ever break free of these criminals, but we're getting a lot closer than we were 10 years ago when we were fighting the same fight.
Some of our viewers are highly suspicious of the actual origins and the intent and what the outcomes will be from the cryptos. We have a question from Joseph Giambra, who says, if you know that they totally manipulate and control the markets, what makes you think cryptos were not created by them to be used for them to the end of total control?
Well, I do believe they were created by them. The thing about cryptos is it's not just Satoshi who all of a sudden produced a white paper and it sprung from nothing. Cryptocurrencies were in the works since the invention of computers, especially from John Kemeny, the inventor of basic computing, who gave that to Alan Greenspan in the 60s, who created the electronic financial system and passed it on over and over and over. People haven't been involved in creating a electronic currency, and then a decentralized electronic currency is probably getting into the late 80s and 90s. And then ultimately, literally 2 months after the September 11th failure of the monetary system in 2008, the Satoshi white paper is introduced. I believe Alan Greenspan, the NSA, the Fed, the CIA, they're all in on it from the beginning. The question is it going to be used for good or is it going to be used for bad? I believe it's going to be used for good ultimately, because if you have a decentralized cryptocurrency that doesn't have to rely on anybody else, I mean, with Bitcoin, you don't have to rely on anybody. And everybody says, well, the mining pools are all concentrated in the core developers, but it's open source software. So everybody sees the code. If they want to change the code to put some sneaky backdoor in there, the whole world will see it. So the only risk comes down to the mining pools, a lot of it concentrated in Asia, but there's no limits to someone starting. The United States of America could start the largest mining pool in the world tomorrow if we wanted. So if we want decentralization, just more and more people jump on their computers and run a full node, and you have more decentralization. But I don't think it's a bad guy plot to overthrow us. They would love to use it as a plot to overthrow us, but I don't think they can because of the decentralized nature, the open source software, immutable blockchain, which means you can't go back in time and change things. And the good guys see it, the good guys within the Fed see it as, hey, this is a way out of the old system into something more sound, something we can carry on, but we're going to have to destroy the old system first.
There's a related question from Isip Yat, who says, what are some objective signs that Litecoin will remain as one of the top 5 or even top 1 or 2 cryptos in the future?
Well, I don't know if you'd call them objective signs. I'm looking at cryptocurrencies. The reason Satoshi invented cryptocurrencies was a peer-to-peer cash system. And that was the idea. It was completely to take the power away from the banks, that we had to go through to buy a cup of coffee. We had to do everything through the Federal Reserve System or the banks. Satoshi invented this thing called Bitcoin that could move right around it. Now, the problem with the core developers in Bitcoin is they want to lock it up. It's the first time they've had multi-billions of dollars. They want to lock it up as a store of value. And as a store of value, yeah, it basically competes against gold in that front. But as a means of exchange, you need something that is more flexible, more willing to go on a Lightning Network type of thing, and that's Litecoin. So Litecoin's moment in the sun will come when the old system dies and we need desperately a means of exchange, because it won't be Bitcoin. They don't want, the core developers don't want it. Most of the people within Bitcoin don't want it to be used to buy cups of coffee. Litecoin was invented for that very purpose, to be used as a test net for Bitcoin and to be used to get cups of coffee, the small, tiny purchases. So I do think we're going to see 4-to-1 Litecoin to Bitcoin ratio. And right now I think it's over 100-to-1. Really excited about the future of Litecoin.
Matt, you've been saying that for some time. I remember last time we spoke with you, way more than a year ago, you were saying the same thing. Bill W. says, Bix, with the recent announcement that supercomputers will be able to access any encryption, do you think that that's true, or are they laying the groundwork? Are they laying the groundwork for exchanges to steal cryptos with an excuse?
I think it's true at some point. A lot of people are pointing to the quantum computer, which it's mega fast, like ridiculously fast. And they're saying, well, that can break the SHA-256 algorithm that creates the wallet, so your wallets aren't safe. First of all, we're a long, long way away from that. Maybe 10 years, maybe less. But it doesn't mean that the people creating wallets can't create quantum resistant wallets. And that's what they're doing, working on right now. A lot of things, the whole Google, I think it was Google who said, yeah, we invented a quantum computer. And to understand quantum computers, you gotta understand the costs involved. It's got to be done in 200 degrees below zero in a vacuum. It's really, really, really hard to do. And if you do invent a quantum computer that has applicable use cases, the first thing they'll do, the U.S. government will walk in and blow it up, because that would break every nuclear code on planet Earth. So it's much bigger than just breaking wallets as far as cryptos. If you invent a quantum computer that can break the SHA-256 algorithm, you've got a way to destroy the world, and they will destroy you first. So, when people throw that out, saying, "Oh yeah, this quantum computer is going to destroy Bitcoin," it's FUD in my understanding of it, which is fear, uncertainty, and doubt. And with a new currency, you're going to have a lot of fear, uncertainty, and doubt. I've been through this I got into Bitcoin probably in 2013, And I've heard every kind of FUD, but Bitcoin is what they call anti-fragile. So every time it breaks, it gets fixed, and that problem never comes up again, and it gets stronger and stronger. The quantum computing supercomputers is the same way. It'll break. At some point, they're going to have to say, oh my God, we got to invent quantum resistant wallets. And we'll do it and move forward. But yeah, the imminent threat of Bitcoin, I think, is no, not even. We're not even close to implementing the quantum computers for the first. I mean, Google said they did it, but what's the application? How do you point it towards anything? Especially with the U.S. government saying you can point it towards all our nuclear capabilities and crack all the codes in our nukes. We can't let this happen. They'll blow up Google.
Back to the topic of the real economy and signs that ordinary people can observe and watch for to understand the progress as things evolve or devolve. Typo says, what milestones will we see if it's a slow fall apart?
I think we're seeing them now. We're seeing the Fed repos. Just last night, there was another $35 billion. And it is crazy that the Fed is bailing out. They have to bail out these banks overnight. The huge increase in the derivative book of the top four banks, JP Morgan, Citibank, Goldman Sachs, and Bank of America. Those are the banks, and there's 10 or 15 other ones, and then there's counterparties to all those deals. So yes, if you really want to look for the key to when this is all going to blow apart, it's going to be in the derivative market. Keep an eye on the OCC, which is the Office of Comptroller of Currencies. Releases a report every quarter. They're about half a year behind, but they just released the second quarter, and JP Morgan's up there, I think 58 trillion in derivatives, when December of last year they were at 48. So it is very volatile. They're trying to plug every problem there is with the European banks and the US banks. Anything can make this thing blow. And then you got war and potential trade wars and potential real wars. The price of oil, huge. Oil probably has, besides the treasury bonds, oil's probably got the biggest derivative market in the world. It's gigantic. And with this volatility, there's people losing billions of dollars, especially with the attack on the Saudi refining. Billions of dollars were lost at that moment with the spike in the oil price. We haven't seen who's bloody in the street. I've heard of 2 or 3. I think Mitsubishi lost $300 million overnight. So in a system that is not very solid to start with, throwing little wrenches in like that's another thing that could kick off the derivative bubble.
You've mentioned the long history of manipulation in the silver pricing market and your work in the past with GATA.org. Bob PDXZ says that you've been talking about silver having been manipulated for 150 years. Can you tell us about what evidence we know of that leads us to conclude that there has been silver price manipulation reaching that far back?
Well, it started, there's a great expose, shall we say, I think it's on silverbear.com, something like that, about the opium wars. And the reason the opium wars started in China in the 1850s was that the English loved all the spices and teas that were coming out of Asia. It was a new thing for them, so they were paying for all this stuff in silver. And China was on a silver standard back then, so all the silver from England was going to China and all over Asia, because the English were really just digging on the spices and the silks and everything coming from Asia. And then the bank said, oh my God, we're running out of silver. This is a problem. So what they did is they set up a bank called Hong Kong Shanghai Bank, which is today called HSBC. And Hong Kong Shanghai Bank, what they did was they developed the opium fields in China and got everybody addicted to opium. But the only way you could buy opium back in the 1850s was using silver coin. That's how they refunneled through HSB all the silver back into England. And it's been documented, and it's an amazing history of silver. And then you can go through the silver used in the Manhattan Project to build the first nuclear bomb. They had to take 3 billion ounces out of the US Treasury, which was everything they had in the US Treasury back when silver was money. 3 billion ounces out of the treasury and moved it to Oak Ridge, Tennessee to make these huge magnets to create the first atomic bomb to enrich the uranium. They were called calutrons. And I discovered this watching a documentary. I'm like, oh my God, this is where all that silver went. That's why silver is a huge defense issue, and it's a national secret. We're not allowed to talk about it. Is because we needed that silver to create the first atomic bomb. Now, news of this came out in the 1970s with the General Groves, who was in charge of this, and he told the whole story. Yeah, we had to borrow the silver. The official story was in 1951 they put all the silver back in the treasury, which is ridiculous. You created the first atomic bomb, the most powerful weapon on planet Earth. You're not going to shut down the facility. And they didn't. And as a matter of fact, they did shut it down after they figured out a new way to enrich uranium. They shut it down in the mid-1990s and then shipped a huge amount of silver out of the U.S. to England. And there is the documentation's there in the export data for the U.S. Chris Powell of GATA said, what is this huge blip for 4 years of silver, 5 times the amount of silver coming out of the U.S. and going overseas? And it was the shutdown of the nuclear power facility it wasn't nuclear power, it was creating the first nuclear bomb at Oak Ridge, Tennessee. Really interesting stuff. And then obviously we have the COMEX rigging, which is now being exposed. Jamie Dimon and Blythe Masters from JP Morgan after they took the silver short position from Bear Stearns. So yeah, there's 100 other things over the years. Charles Savoy was the guy who wrote a lot of the articles. Look up Charles Savoy and Silver Stealers. Amazing document that documents 100 years of silver manipulation.
A couple of the principles that you just described echoed more current stories that are being reported right now by some of our guests. You mentioned about how dangerous running a trade deficit is if you're dealing with sound money. In other words, if money is gold and silver and you're running a trade deficit, you're bleeding out gold and silver in your country and you'll bleed yourself dry if you don't balance your trade deficit. Wayne Jett from classicalcapital.com has been on our show several times. He's talking about that, about why if we have any hope of returning to any kind of a gold standard to backing for our currency, we've got to solve our bleeding trade deficit right now, because you can't just keep sending funny money overseas. You got to send real stuff when you have sound money. And secondly, when you talked about the gold silver, the silver bleeding out of England, leading to the opium wars with China, it echoes something that Rob Kirby is talking with us about why the U.S. is actually selling non-profitably domestic oil and gas overseas, because the rest of the world has pivoted away from selling oil for the petrodollar, and so somebody's got to do it. And anyway, the whole thing about drug money laundering and so on. So it's quite interesting how many different, it seems like different plays get brought back and run again, even though centuries may have passed. There's a related question about silver demand from Curious Kiwi and Austrian Bear. Bix, do you think Tesla's free energy tower uses a lot of silver to function given conductivity? Is this one of the, quote, high-tech silver demand drivers in Cliff High's data, do you think?
I'm not so sure that the Tesla tower needed it, but there's definitely all kinds of new inventions in high tech, and it's soaking up and consuming literally a hell of a lot of silver, and the industrial demand for silver gets bigger and bigger as we move into a new high tech future in flat screen TVs and solar power. And then there's the hidden technologies, the stuff we're not supposed to talk about, like the Tesla stuff, and a lot of talk about free energy type of things, 0 point energies, where you create more energy than you put in. We've been able to do that since Tesla days, and it's been stopped at every point and function. Every time someone invents something like that, they either get bought up and it goes into research, or they get disappeared, or they get murdered. And it's really sad that such an amazing thing for humanity, such as free energy, has been held back from us for so long. So I do think silver will play a huge part in that future, and that's my hope for the future of silver is not as money, but as on the technology side, and it's consumed on that side. So again, silver disappearing faster than it's being pulled out of the ground.
Glenn Jones asks about, you mentioned and also something I forgot to mention before. You mentioned all these wars that have been caused by bankers, and that's certainly Mike Rivero, who's coming back on in a couple weeks, talks about all wars are bankers' wars, and he goes on a litany of examples of that. But speaking of banking, Glenn Jones says, Bix has said that all banks will disappear in a big collapse. Now, I'm not quoting you on that, and that somebody said that, but you can maybe address that separately. But all debts are someone else's asset. Debts will not disappear, and neither will all your money in the bank. All the financial records are run and held by banks and won't disappear. The debt-based monetary system combined with graft and corruption is the problem, far more so than that of the banks. So can you talk to us about what you believe will happen to banks in the event of a big collapse?
Well, it's not me who said it. I believe it, absolutely. It was Senator Kanjorski right after the September 11th, 2008 run on the banks. That's what he said was about to happen. He came out, I don't know if you've seen that interview, but he came out a few weeks later after the big collapse in 2008 when the banks literally had hours to go. And he said, we had to make a decision. And that decision was to either bail out the banks, give them literally open the coffers and say, take whatever you want, or the entire system fails and breaks down because of the derivative market. It's a $2 quadrillion market that, I mean, the largest bank in the world is Jamie Dimon's JP Morgan. And it is not that big. It's a couple $1 trillion in assets, whereas they have 56 trillion in derivative exposure. And every one of those derivatives has a counterparty. Yes, a lot of them offset, but it doesn't take much, as we saw in 2008. So yes, I do believe that if we don't bail out the banks this time, they will be coming to Congress. If we say no to the bailout, then I do believe every single bank and financial institution will collapse because of the derivative, because of the contagion, and every bank is interlinked between these too big to fail banks. That's why they call them too big to fail banks. Now, when it comes to the derivatives and it's somebody's liabilities will get wiped out, yes, absolutely. The other side of the transaction is going to get wiped out. The electronic money, the electronic fiat-based unbacked money will get knocked away, gone. Because you can't lose one side of the balance sheet and keep the other side. People say, well, they're going to still collect on their mortgage. Not if the bankers lose all their money. And remember, they're highly levered. Most of them 10 to 1, some of them 30 to 1 in Europe. So no, all it takes is a 10% drop in their tier 1 capital, and all of a sudden, poof, they're insolvent. And then all the bad deeds of the past in the derivative market come tumbling down. Now, is it a bad thing or is it a good thing? It's a bad thing for savers. If you have your wealth in a statement from Charles Schwab or Fidelity or some kind of investment house, you don't have anything. You've got an IOU from an insolvent banker situation, and the DTCC isn't helping at all because they're allowing the re-hypothecation of even Treasury bonds. So yes, absolutely. If the derivative bubble pops, which I do believe it will pop very soon, then yes, all banks will be gone because they are levered 10 to 1, 30 to 1, you name it. And we saw it almost in 2008. Had we not bailed out the banks, the entire system would have stopped.
I want to ask you 2 follow-up questions there. One, first, I'm going to corroborate with one more real-life story that corroborates one thing you said, and that is back in the 2008 collapse, my wife and I had previously, trying to protect ourselves from the possibility of such a collapse, had moved all of our money that was with a particular investment brokerage, major big-name investment brokerage, out of the stock market and into what they considered a cash-equivalent money market fund. It was called the reserve fund. And when they sent us a letter saying your money that you had in the reserve fund is not going to be accessible until further notice, and then later on they said we've restored some of your money, but the rest of it's not going to be accessible until later notice, and we never got all of it back. And they still call me back every year and say, hey, is there anything we can do for you? We noticed you haven't been making any trades. I said, yeah, give me my money back, because what happened was the reserve fund, which was supposed to be this solid one-day access to your funds, was invested in Lehman Brothers on the back end and in highly speculative things on the back end. And when Lehman Brothers came tumbling down, all that the backing for all of all the gambling that they had been doing with our money went to nothing, and so we never did get all our money back. So that's point number one. But when you talked about people who have their funds in the system, that's one concern of a lot of our guests and of our viewers. That is, they're concerned about how can they protect themselves from the potential catastrophic loss of their savings, their retirement plans, things like that. So what strategies do you think people should at least look into to evaluate whether it makes sense for them to reduce those risks?
Well, the obvious ones, the ones I've been talking about for over 20 years is gold and silver. Gold as a store of value, not a means of exchange. I think the days of gold as a means of exchange are long gone. But as a store of value, it'll be a store of value for a long time. Obviously, the problem with gold in my research is how much gold is out there, the scarcity value. I've done so much research on the things we were talking about using other people's natural resources first. That's been the U.S.'s plan since the 1920s is hide all our natural resources in the ground, use everybody else's first while they accept these fiat money pieces. So yes, I think gold will do well as a preservation of value, but not as well as silver, which is absolutely necessary if gold goes away as an asset, nobody would really care except the people that held it. If silver went away, it affects the entire planet because silver is used in everything. It's not just a store of value. It's not just money, but it's used in all kinds of electronics. And a world without silver would be a very different world for everybody that uses any kind of electricity. And then the other thing, so you have gold and silver in your hand, not held by a third party, because that's huge third party risk as the banks collapse. And obviously, well, not obviously for a lot of people, but cryptocurrencies. The real good cryptocurrencies that are mathematically provable, that are decentralized, meaning they can't show up at the office with guns and say, okay, we're going to shut you down. And there's just a handful of them. I do think a lot of them will do well after the crash, but the ones that you want to hold during the crash are Bitcoin, Bitcoin Cash, Litecoin, maybe Digibyte. And then if you think about the future of money, yeah, we're going to be using cryptocurrencies in everything we do. Especially if we open the exchanges up again, what are we going to use to verify that every transaction is a real asset? We can't do that now. We rely on the DTCC to do that. So cryptocurrencies are great for that as long as the blockchain is immutable. It means you can't change the blockchain. So yeah, there's a lot of great things to pick from when you're out there figuring out how you're going to survive this, and keep a little cash on hand because you're going to need it for a few weeks and months until other people say, oh my God, we're out of cash.
Hey, one of the things I forgot to ask you about, you've mentioned it twice, I think, so far, is this re-hypothecation of US Treasury bonds. I had not heard anybody else talking about that. We've certainly heard concerns about re-hypothecation of physical gold and silver by some non-segregated bullion storage facilities, that kind of custodians, that kind of thing. But what evidence do we have, or where can people find out more about that, about this claim that there's been re-hypothecation of U.S. Treasury bonds?
Well, it goes back to when I was doing work with the DTCC, the Depository Trust and Clearing Corporation, that they basically hold all assets, all paper assets, electronic assets in their possession under the name Seed and Company. They own all the mortgage-backed securities. They own stocks and bonds.
Yeah. I encountered that when we were trading stocks quite a bit, and I kept getting these reports, and they said they're going to be held in the name of, and it's like, wait a minute, because even when you get your proxy statement, it's like, yeah, you get to vote, but just because we really are the ones who are really holding your stock, it's like, well, I thought that was my stock. No, it's not your stock. Go ahead.
Yeah. So going from there, it went, when I went down the rabbit hole with obviously gold and silver is rehypothecated, we see the amount of trades versus the amount of metal available. And in crypto's the same. And it turns out stocks and bonds are the same as well. If you look at a great example is Dole Foods. Dole Foods went private. The shareholders said, no, we don't agree to this sale price. So it went through the courts. And the judge said, yeah, you shareholders are right. They undersold this. So you can apply with the company and the purchaser and say, okay, here's my share. I want this. They got an extra like $16 a share or something to that effect. Well, only $35 million or 35 million shares had been allocated in the float. So the total amount of Dole shares were 35 million, and they had redemptions of 49 million. And they were all legitimate DTCC certified shares. And a lot of people didn't even bother.
Right.
People
So
with
it's a
one or
lot
two
bigger than
perhaps.
that, really, the pool.
It was even bigger than that. And that has been what the talk is, behind the scenes talk about why the banks no longer accept each other's collateral. Because the Fed will. The Fed just, all they want to do is keep the system going. They're in charge of the jukebox. And in musical chairs, you don't want to be the one, unless you're in charge of the jukebox, you don't want to be the one holding the assets that are pledged to 2 or 3 different companies. So that's kind of where is there proof that US Treasuries are re-hypothecated? Some people are digging into the books of, it's the big ones: JP Morgan, Citibank, HSBC, and Deutsche Bank. And they're trying to get into the books to find out the specific Treasury bond number assigned to each one of these banks. But they're flipping them every night. Every night they flip billions, hundreds of billions. Right now, I mean, they're at $180 billion of repos that these are pledged to the Fed. And it's all done with computers and derivatives now. So nobody really knows who owns what. And the biggest problem is that the banks don't even know what the banks own. So that's kind of where we are, as far as there will be proof. One day we'll look back, like it took at least a month for people to figure out what happened in 2008. It was the mortgage-backed securities and it was the credit default swaps. And then everything else kind of kicked off after that. We're going to look in 2 weeks, 3 weeks from now, look back and say, oh my God, it was the bond market. Nobody knew what was going on in the bond market. And oh, by the way, these criminal banks were re-hypothecating anything and everything they had. And it can also be seen in the jump in derivatives of $11 trillion from the fourth quarter in 2018 to the first quarter of 2019 by JP Morgan himself. JP Morgan, Jamie Dimon and friends are in big trouble. Keep an eye on their earnings call this in 2 or 3 weeks.
Well, one more point I have to press you on, because you made the comment in passing, and I forgot to jump on it with you, was when you said in response to the question about don't banks just all go away and what happens when the derivative complex comes tumbling down. People can really relate to that. All these painful points from my own life. When we were trading stocks on margin, or we're using options, and things go against you there where you're highly leveraged, stuff that you had that was like, you could be up $160,000 in the morning and it's all gone by the afternoon. You wonder, whoa, what happened? Because the leverage can cut absolutely both ways. But in cases like that, doesn't the Fed and other central banks have a design of stepping in and being the borrower and lender of last resort and buyer of last resort, so that they get to actually end up be the ones holding the actual assets, the homes, the real estate, the different things in the end of this, when this whole derivatives complex comes crashing down?
Well, yeah, I mean, that's if they want to keep the system going. See, that gets us to another point. In 2008, it was decided to keep the system going, so that's exactly what happened. The banks bought all the fraudulent mortgage-backed securities and treasury notes, and I don't even remember how big the balance sheet is now, $3 trillion, $4 trillion for the Fed. The problem is now it's so much bigger than it was 11 years ago. So the same thing is going to happen. They're going to go to Congress and demand a bailout. It'll be bigger than the $700 billion, and now it's a different Congress. Now our Congress can't agree on anything right now. I mean, completely dysfunctional. Not only that, but we're a lot smarter about what these banks did in 2008. If you walk down the street today, there's been movies and books about this stuff. You walk down the street today and say, would you be in favor of a bank bailout if they get in trouble again? And 99.9% of the people will say, not a chance. But this time is different, because they're coming for $20 trillion. $20 trillion. And from what I hear on the Dodd-Frank Act, the way that Citibank wrote another passage right before it got passed, and in that passage it said they have to bail out the derivatives before they bail out ma and pa checking account and savings account. And everybody was up in arms saying, "Oh my God, can you believe they're doing this? These criminal bankers." I think it's the best thing ever, because it assures that there will be no approval of a bailout. If you tell, hey, these bankers need 20 trillion to bail out their derivatives, and then only then can you get paid out on your savings account your $250,000 or whatever it is these days. That assures, to me, a answer of no. And an answer of no, although it will be painful and chaotic, it is the only way to get to a sound system. We got to get rid of
one more thing to corroborate one thing you just said. We've had Catherine Austin Fitz on our channel from the Solari report.
Oh my God.
And she's talking about how the amount, if you add up the amount of all the bailouts that were officially recognized that happened from the 2008 collapse, it would have more like paid off. I forget if she said more than once or if it was like 4 times. It could have paid off all the mortgages for all the people who got foreclosed on that lost their mortgages. Totally could have. So the bailout could have happened at the grassroots level if that was the real concern that people had, is like, no, we got to save these banks or else people are going to lose their homes. Well, the people lost their homes, and the banks are the ones that got bailed out. So now you're saying it even goes to the next level in this next round of the game. It isn't just mom and pop that aren't going to get bailed out, and the banks. Now it's the derivative complex that they've extended on to infinity. Bix, we've had you. It's been too long since we've had you back on here, and you fielded some pretty exciting questions here, and just wanted to ask you before we let you go, can you stick around for a bonus question for our Patreon subscribers?
Absolutely. Patreon's the best.
And so for any of you who are not Patreon subscribers of Reluctant Preppers right now, all you got to do is go to patreon.com/reluctantpreppers, and you can pledge any amount of support on a monthly basis to support us, and you'll become part of the club that can get access to all this bonus footage we've been putting out there for lots of our guests recently. But I just wanted to thank you, Bix, for joining us here again on Reluctant Preppers.
Hey, thanks for having me.
Hey, Reluctant Preppers, if you want to hear more of bonus footage from other guests we've had on, come on over right now to patreon.com/reluctantpreppers and access that bonus footage there. Take care.
It seems so hard to order. Who can I trust, and how do I even start?
Oh, you just go to sdbullion.com/rp, pick out whatever gold or silver you want, add it to your cart, you can check out, and it's on its way. And they're A+ rated by the Better Business Bureau.
Wow, it's that easy?
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp.
After I order gold or silver, how can I trust I'm going to get it? And I don't want everybody to know that I'm ordering gold and silver.
Oh, it's okay. It's fully insured. It's trackable, and you have to sign for it, so nobody else is going to get it but you. And it comes discreetly packaged. If you order a small amount, like maybe gold, it'll probably come in a box that looks something like this.
Okay.
And if you order a large amount, maybe like silver, it'll come in a box that looks something like this.
Wow.
But it doesn't say gold or silver on there. It might say something industrial or something else like that, but nobody's going to know what you ordered.
Oh, that's great to know.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp.
If I own gold or silver, how will I ever be able to spend it?
Oh, sure. Well, consider good times or bad times. Like in good times, you can sell it back to the same place you bought it from. sdbullion.com/rp will buy it back at the best price guaranteed on the internet. You can take it to a local coin shop and get cash in your hand, completely anonymous. Some people you know may be willing to take gold or silver coins in exchange for goods or services. Now, in bad times, when things have really fallen apart, time after time in history, people have found that in hard times, gold and silver really does come through as something that people recognize as value even after everything else has failed. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp.
What if gold or silver drop in price after I order it?
Well, everything fluctuates with time, but nothing has held up longer and better than gold and silver throughout all the changes that have happened in history. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp.
good does gold do me anyway? I can't use it for anything.
Well, I think I found a form you might appreciate.
Wow. That's beautiful. Wow, I can wear that just about anywhere.
And you can take it with you through airport security and across borders. It's small and compact and lightweight, and you can even hand it down through generations. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.